Welcome to the deep dive. Today, we're jumping straight into something that's definitely got people talking: tariffs and tech stocks.
Yeah, it's a hot topic.
And you, our listener, sent over this Motley Fool piece, Tariff Turmoil. Are tech stocks out of the woods? From just yesterday, April 14th. So our mission today, really dig into what these tariffs could mean.
Absolutely. Especially, with how connected everything is globally. These supply chains, they're complex, and we've seen some big announcements lately, haven't we?
We certainly have. President Trump's recent plan, the one about tariffs on goods from various countries, it definitely sent a jolt through the markets.
Stocks took a tumble.
Yeah, and tech stocks were right in the thick of it. The article mentions the Nasdaq, the tech exchange, actually dipped into a bear market. That's a pretty significant drop.
Big names felt it too.
Oh, yeah. NVIDIA, Alphabet, they were mentioned as taking a hit.
But then things shifted a bit, didn't they? There was some, maybe good news?
Exactly. Initially, the president suggested exemptions for electronics. Things like smartphones, chips, the core stuff, really.
Okay, so that must have calmed nerves a little.
It did, for a moment. But then, almost right away, there were hints that maybe those exemptions weren't, permanent. And that new tariffs, maybe specifically targeting tech, could still be coming.
So that leaves us with the big question, the one in the article's title, really. Are tech stocks still facing big risks here, or is the picture maybe getting a bit better?
To figure that out, we kind of need to understand why tech is so sensitive in the first place.
Right. It boils down to how they make things. These companies, they're incredibly globalized.
It's not just sourcing a few screws internationally, is it?
Not at all. They rely heavily on international networks for components, specialized parts, and for the actual mass production of the finished gadgets.
And why is that? Is it just cheaper?
Well, cost is part of it, sure, but it's also about specific expertise, these huge manufacturing ecosystems that have built up over decades in certain places, and just the sheer scale needed. Think about Apple.
Right. The article uses Apple as a prime example. iPhones mostly made in China, though they're starting to branch out a bit to India, Vietnam.
Exactly. But moving that kind of massive production, it's not like flipping a switch. That Bloomberg intelligence estimate you mentioned.
Yeah, from 2022. It said it could take Apple almost 8 years just to move 10% of its capacity out of China.
8 years for just 10%. It really shows the scale we're talking about. It's immense.
And it's not just about building factories, is it?
No, it's also about specialized knowledge, the infrastructure for very specific things. That stuff isn't easily copied somewhere else overnight.
So when tariffs hit these imported goods, what happens to the companies?
Well, the direct hit is costs go up. Simple as that. They pay more for the parts, more for the finished products they bring in.
And those costs have to go somewhere, likely to consumers. Higher prices for phones, laptops.
That's the risk, definitely. And if prices go up too much, people might buy less. That hurts demand, hurts sales, hurts earnings. It's a chain reaction.
Which could explain the market reaction we saw initially.
Precisely. The Nasdaq entering a bear market, those big, magnificent 7 tech stocks leading the decline. That shows you how worried investors were about this exact scenario.
Okay, so then came the news about the exemption. What exactly was covered?
Right, so on Friday, there was that sigh of relief when the president announced exemptions for smartphones, chips, and other electronics.
That sounds pretty comprehensive for tech.
It was. It directly shielded them from those immediate cost hikes. Good news for the companies, for investors, and, for consumers hoping prices wouldn't jump.
That is fast.
But yeah, the optimism didn't last long. As the article points out, by Sunday, President Trump and others were suggesting it might just be temporary.
And hinting at potential new tariffs, specifically on tech later on.
Exactly. Which just brings back all that uncertainty, doesn't it? A temporary fix doesn't really let companies plan for the long term. The underlying risk is still there if it's just delayed.
Speaking of long-term adjustments, let's go back to manufacturing. We talked Apple, but the article also brings up NVIDIA, crucial player, especially with AI chips.
Yes, NVIDIA is fascinating. Their main chip maker, TSMC, Taiwan Semiconductor Manufacturing Company, they are investing heavily in the U.S., in Arizona.
That sounds like progress, moving production stateside. The article said that Arizona plant is producing quite a bit already.
It is progress, definitely, but, and this is a key detail, the Arizona facility currently doesn't have the capability for the most advanced packaging.
Packaging, like putting the chip in its final casing.
Sort of, but it's a very complex, specialized stage for high-end chips, crucial for things like NVIDIA's new Blackwell chip. And that advanced packaging, still happens mostly in Taiwan.
So even with the U.S. investment, there's still this critical dependency overseas.
Exactly. It just hammers home how hard it is to untangle these supply chains. It's a huge long-term challenge for basically any tech company making physical products.
So this isn't just an Apple or NVIDIA problem.
Not at all. The article makes it clear. Most electronics companies face similar issues, similar dependencies. It's systemic.
Now, there's a point that the article clarifies that seems really important. Who actually pays the tariff?
Yes, that's key. It's often misunderstood. The tariff might be on goods from China, for example.
But it's the U.S. company importing those goods that writes the check. They pay the duty.
That's exactly right. The importer pays. So it directly hits the bottom line of these American tech companies. It increases their cost of goods sold.
Which is why they're so concerned. Okay, so how are the government and industry reacting now? The fact there was an exemption, even temporary, that seems telling.
It does. The article suggests it shows the government is at least aware of the industry's concerns. They're not just ignoring the potential impact.
And President Trump posting on social media that his team is taking a look at the electronic supply chain.
Yeah, that also suggests some level of, ongoing consideration. It's not a closed issue.
So the article hints at maybe some cautious optimism that future tariffs might be set at a manageable level.
Right. The thinking is the government probably doesn't want to completely kneecap the U.S. tech industry. It's too important to the economy.
There's probably a balancing act going on. Using tariffs for leverage, maybe, but not wanting to cause major long-term damage to a key sector.
That seems plausible. It's a delicate balance, and you can bet the tech companies themselves are working hard behind the scenes.
Oh, absolutely. The article notes they'll likely be lobbying, trying to influence whatever levels are eventually set. They have a huge stake in this.
Makes sense. So let's pivot to the investors, to our listener. What does all this mean for them?
Well, the article suggests tech isn't totally out of the woods yet, risk-wise.
But maybe in a slightly better spot than before the exemption.
Exactly. That immediate broad tariff threat is off the table, at least for now. And the advice, as always in times like these, is think long-term.
Right. Don't panic based on short-term swings.
And interestingly, despite the recent drops, the article points out that some of these leaders, it mentions NVIDIA again, others in the Magnificent Seven, might actually be trading at more attractive prices now.
Bargains, potentially, if you believe in their long-term prospects.
That's the idea. The argument is that the fundamental strengths of these companies, their innovation, their market position, that stuff hasn't really changed because of tariff talk.
So if an investor can handle some bumps in the road short term,
this could be a time to look at potentially buying some of these beaten down stocks for the long haul. But, always consider your own risk tolerance, of course.
Standard disclaimer, but important. It's the buy low idea, but with the understanding that volatility might stick around for a bit.
Okay, so let's try and wrap this up. We saw the initial shock, tariffs looking like they'd hit tech hard.
Then some relief with the temporary exemptions for electronics.
But now, this lingering uncertainty. New tech tariffs might still be coming.
And underneath it all is this deep reliance on global manufacturing, especially in Asia. It's the fundamental reality.
Yeah, the situation is still very much developing. The final impact, we don't know yet.
It's definitely fluid. The immediate pressure eased, but the core issues haven't vanished.
Which leaves us with a final thought for you, the listener. Thinking about how tangled these supply chains are and how trade policies can shift. What kind of really innovative, maybe even radical strategies might these tech giants need to consider long-term just to shield themselves better from all this geopolitical risk?
That's a big question. Definitely something to watch.
Indeed. Thanks for taking this deep dive with us today.